the concrete ways in which government up until this point has tried to manage the economy. You increase the incentives for more central management. You increase the incentives to ensure that those interests are protected. That just makes it simply pragmatically more difficult to see real reforms.
Why is the South African government adopting a siege mentality towards trade and investment? This is a question that we at the Centre for Risk Analysis considered in a recent exclusive client webinar. In this extract from this webinar, CRA senior analysts Bheki Mahlobo and Chris Hattingh outline the reasons for South Africa's hostile economic policy position. Enjoy. Right, well, Bheki, whilst we wait for other questions, I have a question for you. I mean, you started off your presentation by talking about gross fixed capital formation. It's a kind of wonky economist term. But why is that important as compared to, say, portfolio flows, the ebb and flow of capital?
Yeah. Because
in many ways, our globalized world, there's a lot of hot money sloshing around, particularly with all of this stimulus. But when you invest in a factory or a mine, that's a longer term commitment to an economy, and seeing that dwindle, I think, is kind of a concern. So do you want to speak to that? Why do we highlight that in our presentation?
Yeah, exactly there, David. Yeah, gross fixed capital formation is the investment in factory plants and equipment. This, as you've rightly stated, is the long-term investment in a country, essentially, by businesses. And the thing that's often missed by businesses is that they need a level of certainty in regards to the investments. Business on a day-to-day basis have to navigate the world of uncertainty. And if the pressure becomes unbearable, then they simply take the investment elsewhere. Now, the reason why we emphasize on gross fixed capital formation, like as you stated, due to the long-term consequence of it, as well as the benefits that the country reaps from an increase in fixed investment, such as that of employment, for example. I earlier mentioned on the building of firms, as well as that of an increase in other businesses in the country, which is also reflective of business sentiment in the early decade of South Africa. If you're looking at the Saki Business Confidence Index, which reached its highest point in 2007, as accompanied by high levels of economic activity in the country. So if you see an increase in business capital formation, you're seeing an increase in productivity, as well as an increase of people being employed, reflective of that earlier trend that I showed earlier. Now, the difference between fixed investments as well as hot money, such as seen in bonds and equities, is that hot money, it's very easy for money to come in as well as for money to come out. What happened in South Africa over the past 3 years is that investors have been highly looking at South African bonds, particularly from a government bond perspective, due to the high yield that South African bonds have, which is just close to about 10% compared to the US, which at the time was 1%, is now has increased to 3% due to what's happening on a global context, as well as Germany's low yields. So investors seek yield by looking at South Africa's high yield. And once they've seen that South Africa is highly risky country, they simply take their money elsewhere and quickly compare to fixed investment levels. So what we believe was going to happen here, David, is that for the next coming weeks, due to the curtailing of monetary stimulus, the increasing of interest rates, what you saw, for example, in the United States, what you saw in ECB, is that investors will look at South Africa as highly risky and take their hot money out of South Africa and take it to the dollar, which has resulted in the strengthening of the dollar, for example, there. So fundamentally, what the country needs is to largely see an increase in fixed investment levels, which can only be achieved by a favorable policy environment. This means that you remove policies that weaken that groundwork, that weaken the groundwork of bricklayers of those businesses, such as EWC, as well as that of rigid labor market policies, which disincentivizes investors.
Yeah, Bheki, I think that's quite right. And we do have a couple more questions in the Q&A, which I'd like to get to. But just to respond to you there, I think one of the misconceptions that I think the government has around investment, that we just need to tell the right story, that we need to have investment roadshows and conferences and invite investors to come to the country and to set up shop. But investors are going to be looking for one thing, which is return on investment. Can they make a profit in this country on a sustainable basis? And I think we really need to kind of get down to the first principles there. Like, why is a company going to come here in the first place? Not through goodwill, it's through self-interest. All right, so you must forgive me because I was a little bit confused because I saw that a Chris Hattingh commented in the Q&A, but it is not our Chris Hattingh, it is another Chris. So thank you for your comment there, Chris. The facts are plain to see, he says. The prevailing question should be, why would the government remain entrenched in its socialist, i.e. centralized government position? More specifically, what is its aversion to free markets? Okay, so Chris, other Chris, what would you say in response to your namesake there? Why do you think that there's this strong attachment to this kind of centralized command and control kind of philosophy in terms of economic policy?
I think part of it might have in the past been based on ideology, and which is to say, a different view of how society and the economy should be arranged or managed, kind of thing. I think at this point, you still have that sort of guiding maybe fire as the basis for some of these policies, based on a more command control outlook, but it's also pragmatic. So if you have radical pro economic freedom reforms, you possibly increase the chance for competition for bigger established government entities, such as Eskom or Transnet, for example. When you have reforms in labor, you have competition for trade union members, as another possibility. So when you increase the scope and the concrete ways in which government up until this point has tried to manage the economy, you increase the incentives for more central management. You increase the incentives to ensure that those interests are protected. That just makes it simply pragmatically more difficult to see real reforms. And a real reform to me is not something, for example, as a spectrum auction, because government can still in some ways be involved there. It's something like labor market reform, or saying that the dilution of all South Africans' property rights will be completely off the table. I mean, those to me are real substantive reforms. It's going to be very difficult to break up a lot of these sort of vested interests. And we see the melding thereof in areas between the public and private sector, where some actors in the private sector try to lobby government for protections on themselves. We see this now, for example, in localization, where it'll create some short-term jobs, maybe for some companies who get subsidies, but overall for the good of the economy as a whole, you see negative effects again in terms of protecting oneself from real competition and making sure that no matter the bad decisions that you take, you don't really need to reform, because government will always be there giving you some sort of subsidy. So I do think a combination to my namesake in terms of both ideology, but also at this point, pragmatic self-interest and trying to protect the gains maybe that one has made in an illicit or at least shadowy different way, but you're trying to protect yourself from real competition in the marketplace.
Yeah, but as we're seeing with this political realignment that's happening, that we've commented on quite a lot recently, is that the ANC, because of its attachment to this policy framework and ideology, creates a trap for itself, because all of the other social ills start to amplify, unemployment continues to rise. And we see this with this recent policy document that we commented on one of our risk alerts, where the ANC seems to recognize the extent of the problem, the electoral declines, all of those things, but its solutions are more of the same, kind of doubling down on its existing policy framework. Right, well, Bheki, there's a great question here from Sandra, who says, what does Chris or Bheki see as the 3 top priorities for government in respect of policy? Do you want to have a shot, and then maybe we can hear from Chris on that excellent question as well?
Yeah, sure there, David. The first one is that you need to incentivize investors in your country. It means that you need to strengthen property rights, no dilution of property rights, utter scrapping of EWC, utter scrapping of any form of nationalization of South African institutions. Also having a look at rigid labor market policies, which act as more of a burden on businesses. Those are areas that need to be touched on.
Thanks for watching. Did you know that the CRA is more than a YouTube channel? We also have a range of other products and services available exclusively to clients of the CRA. We also have a members only section of the channel. So if you would like to watch the full recording of this webinar, you can do so by clicking here. My name is David Ansara. This is the CRA. Until next time, take care.